Good morning, this is Dave Toth with an RJO MRT Technical Webcast update on the S&P E-Mini and Mini Russell 2000 markets for Tuesday, May 2nd. Starting off here with a daily chart of the S&P E-Mini. You can see the past week's accelerated, trendy, impulsive continuation of the secular bull trend above the key resistance over the past couple of months between 1336 and 1343 that reaffirms the secular bull trend. That, on a monthly log scale chart shown here, shows virtually no levels of any technical pertinence between spot and the all-time high from October of 2007 at 1587. That doesn't mean we're forecasting a continuation of this bull trend to that level or through it, but until or unless the market negates this clear and present uptrend with a break below a recent corrective low, any amount of upside it must be considered possible, including run to and eventually through that 1587 high. Moving back to a daily scale chart, you can see this. We are acknowledging, by virtue of the past week and a half's sharp breakout, the market has defined former resistance between 1336 and 1343 as new support that one would expect them to hold ahead of a continuation of the secular bull trend if this trend is still truly strong. A break below at least that area, and specifically a failure below the 1327 corrective low from April 25th, the most recent and tightest corrective low and risk parameter on this larger degree scale. The market is minimally required to fail below to threaten this secular bull trend enough to warrant moving to a neutral sideline position. From a shorter term perspective, shown in the 4-hourly chart here, you can see the developing impulsiveness, the trendiness of this bull trend, with this latest round of highs Friday and overnight defining former 1358 area resistance as new support, and in general and specifically the 1352.75 corrective low from Friday. This market is minimally required to fail below to require shorter-term traders with tighter risk profiles to move to a neutral sideline position in order to circumvent a slightly larger degree correction of the past couple of weeks portion of the rally from 1290. In sum, a bullish policy remains advised with weakness below at least 1352 and preferably 1327 required to defer or threaten this bullish policy and bullish exposure. Moving to the daily chart on a log scale active continuation chart basis of the Mini Russell 2000 market, you can see the past 3 days break above the early April high at 85.81 that reaffirms its secular bull trend, not only on a daily and weekly scale but on a monthly log scale going back, showing the past week's break above the all-time high from July of 2007 at 85.65. On virtually every scale, the trend in the Mini Russell is up and should be expected to continue and perhaps even accelerate, with a failure below the 81.34 corrective low from April 14th required to confirm a bearish divergence in momentum of a scale sufficient to threaten this major bull trend and expose a larger degree correction or reversal lower. In lieu of such weakness, interim setback attempts are advised to be approached as corrective buying opportunities ahead of a continuation of this major bull trend, with the former 85.80 area resistance now considered new near-term support. From a short-term perspective, looking at a 4-hourly chart here, you can see the past 2.5 weeks developing uptrend and impulsive trendy behavior, with former resistance from the 86.08 area from mid last week now considered a new support condition on a very short-term scale, and last Thursday's corrective low at 85.38 as the minimum short-term level this market is required to fail below to confirm a bearish divergence in short-term momentum sufficient to require short-term traders with tighter risk profiles to move to a neutral sideline position in order to expose the depths unknown of an interim corrective setback of the past couple of weeks' rally. In lieu of such weakness below at least 85.38, the trend is up on virtually all scales, and a full bullish policy and exposure are advised with, again, tight risk parameters at 85.38 for shorter-term traders and 81.34 for long-term traders. Please stay tuned to updates on these and other markets on our RJOMRT.com website, and good luck with today's trading.